Joining me now is James Chuckmuck, partner and portfolio manager at Clockwise Capital. James, you want to weigh in on what you think is really going on here with Prime Day or days?
Sure, I think Prime Day is all about just flexing the platform that they have, and if you look at the tech sector more broadly, I think what you're going to see is a bifurcation of valuations between true platforms like the Amazons, Apple with their Play Store and or their App Store, and Google obviously with YouTube, versus services like Netflix. So I think you will see more valuation support coming toward these platforms. But as it relates to Prime Day, I mean, look, it's the you're still talking about upwards of $4 billion on a $120 billion base of revenue for the quarter. So that's 3 to 4 percentage points of growth lift for 2Q that we should see. So even though it is more subdued than in recent past, it's not insignificant in terms of the actual contribution to the financial
It's
performance.
top line growth, but some of these markdowns on their own televisions and different hardware products are pretty deep. So what's it going to do to profit margins?
I think profit margins, it's not so much on the commerce side. On the commerce side, you're always talking about a single digit margin for their retail business. It really comes down to, how much contribution can they get from their growth assets where they're investing, like Amazon Web Services, their expanded efforts into grocery, more logistics offerings with their new global delivery services group, as well as their media offerings. So I think on a consolidated basis, as they right-size the company, right-size capacity, and right-size the employee base, things will start to flow through to the bottom line. And this is a company that, on a normalized basis, if you assume that they scale back investing, they could contribute upwards of or produce upwards of $7.50 in earnings, relative to the $2.50 that the street's modeling for next year. So I think the margin performance will come and start to materialize and crystallize starting this quarter and into the next couple of quarters.
The analysts over at Citi make a couple of points this afternoon about the stock or about the day. They say Amazon has been up there climbing, or one of the top apps, free apps available for download. It's a good sign that there's consumer demand. They point out that this event is also happening in more countries than ever. I think 21 countries or something like that. So it's global. It's not just about what's going on here in the U.S. But more fundamentally, how do you want these drivers to translate into your base case for Amazon shares to double? What do they need to do to kind of get more of the investing public on board with that trajectory?
Sure. Well, first, Amazon remarkably has become a show me story. They want to see, investors want to see that they can actually grow again, versus the low single digit growth numbers that we saw on the commerce side, and actually produce profit. Now, they've done both of those really well in the past, oftentimes not at the same time. But I think that you will start to see those two things come together. The mean reversion in the growth rates will push it back up to the teens by the end of this year. And with the Prime Day boost, you should be upwards of 20% growth by the end of the year. And then you have on the margin side, like we talked about before, which is the right sizing of capacity, the fulfillment centers and whatnot, and the fuel surcharges that they're charging. They should be able to control the expenses much better. And you're seeing the company much better at being able to scale up and scale down their expenses as in tandem with demand on a more real-time basis than they have been before. So I think those things coming together, you will start to see a much more handsome growth profile on the bottom line. And once you start to see that in tandem with the growth numbers coming back into the top line growth numbers coming back into the double digits, I think that will be what is needed to get to send the shares materially higher from here. You're buying it at 1.8 times forward sales. I mean, this is as cheap as you can get it, and that's why we have no hesitation maintaining it as our largest position in our book.